Hello, everybody. Welcome to Friday. I want to thank everybody that came to go live with Tom today. I really had a good time. We had some technical difficulties with Katie's mic, but it still, I thought was, a lot of good questions came in. A lot of, hopefully helped with some of those answers. So today was a really good day for the market. The S&P 500 was up, almost 0.4%. And today was a day where value did really well. So our models did great. The 10-year Treasury bond came up, and it's been really just every other day. I think the market's going to continue to wander down this zigzag path until it gets some kind of a direction as far as that goes. I still think that direction's on the value side. And I'll tell you, one of the things that I've been thinking about too is just companies that have pricing power. So I saw a headline for an article that said rental cars that were going for $60 a day are now going for $500 a day. And so, you think about that as a consumer, if I want to go to Hawaii and I want to rent a rental car for a week, it's going to cost me, a lot more money than it would have in the past. And so it's not a great thing as a consumer in any of these situations. But as an investor, I'm awful glad that I have Avis in my portfolio right now, because what's going to happen is that Avis is going to be able to control more of the price that they can charge because there's this shortage. And the rental car is really fascinating. Hertz, declared bankruptcy, and a part of that proceeding, they had to sell off 18,000 of their cars. And so over the last year, all the rental car companies have been cutting back on the number of cars that they have. I mean, why in 2020 would you sit on 1 million cars when nobody was traveling? So now they're trying to ramp up. But in the interim, as everybody wants to travel between probably now and the end of the summer, it's going to take a while for this to really pick up. The automobile manufacturers are actually backed up also because the semiconductors are backed up. And so, all of these places, they're going to be able to charge more for those automobiles because there's a shortage of supply. People that want them desperate enough will pay a higher price. Then, there's going to be a higher price for the semiconductors, again, because there's a shortage of supply. People want them desperately enough will pay a higher price. In all of those cases, those companies have pricing power, and it allows them to really make more money per unit sold. Now, in some cases, they might be selling less units for different reasons. For example, because the rental car companies cut back on the number of units they have to rent, they'll make less, in that regards. But when you're making 500 instead of 60, you're still going to have a really phenomenal profit. And so that's happening all over the place. And, as shortage comes in, there's probably going to be some shortage of hotel rooms, by the end of the summer or next fall. If you look at the mobility data for the US and they track basically the cell phone movement data, it's still 23% lower than it was back in February of last year. It means almost a quarter of Americans are still kind of sheltering in place. So when that gets back to where it was last year, I think it's going to go a lot higher. There's going to be a lot more people going around and doing things. And of course, we're all going to be trying to do some of the same things. And there's going to be a shortage of some of that supply. That means the price will be higher. And so, of course, that's bad, for us as consumers, but it's really, really amazingly good for those of us who are investors. So what we have is a portfolio chock full of companies that are going to have really good pricing power. The airlines, the cruise lines, the semiconductor companies, the rental car companies, even the clothing manufacturers and the retail stores that are going to have, they'll be able to charge a bit more than normal because the demand will be higher. And the supply takes time to come online. Semiconductor one's amazing. If you think about it, in order to make a lot more semiconductors, they can probably squeeze more efficiency out of some of the existing factories, so that'll help. But beyond that, they're going to have to build new factories. That takes a long time to get all that in place. So that shortage could stay there. They could stay quite profitable for quite some time because of that situation. So really interesting. So pricing power is part of what you have to consider here and look when you're looking at these companies, will they have pricing power? What's the situation like? It's kind of like having a monopoly where you have that control over the price. Not quite, but similar as far as that goes. That'll eventually work its way out, and that won't be such a big deal. But that's why we're going to see such explosive profits coming out of some of these places. Not only will their demand go up higher than average, but their supply that they're able to give will be lower than average because of all the cutbacks. And so that means a much higher price, which means a much higher profit possibility. So anyway, that's one of the things we'll watch for here. And I think we'll start to slowly see that here as earnings come out. Still think we're going to be on kind of a wiggle path here, for a while until the market kind of really settles in on this reopening position. So good day today. Thank you again for coming to Go Live with Tom. Look forward to seeing you next Friday. And I'll talk to you on Monday for the daily update. Thank you.